Welcome back. Well, Thyrocare is the next management on the show. The stock is up more than 30% in 2024 so far. The company has acquired Vimta Labs diagnostic and pathology business for around 7 odd crores, so not a big acquisition. To discuss this and more, we have Rahul Guha, who's the MD and CEO of Thyrocare, joining in now. Rahul, hi. Welcome to the show. This is Ekta. If you could just start by telling us the rationale of buying Vimta Labs diagnostic business. How many labs do they have? How many collection centers do they have? Are they profit making?
Sure. Good afternoon, Ekta, and thank you for having me on the show. Actually, Vimta Labs is the third acquisition that we've done in this year. We had acquired Think Health earlier in the year, followed by Polo Labs, and now Vimta Labs. What we're seeing is very interesting opportunities where companies have built fantastic brands in different geographies or in specific technologies. So Think Health had built a ECG at home capability. Polo Labs has been very strong in Punjab, and Vimta is very strong in largely AP Telangana. They have 11 labs across the country, but very strong in AP Telangana. And these are brands with fantastic equity in the local markets that they work in. And with the Thyrocare backbone, our operational efficiency and our particularly focus on quality and our cost structure actually creates a lot of synergies between the two brands and allows us to create win-win for almost every acquisition that we've done. This is one of the first three of many, but we anticipate to continue to create win-win opportunities through M&A, where we work with specific local market brands that have built great equity, great relationships in the markets that they're present and where Thyrocare is weak, and use that as a platform to expand deeper and deeper into India.
Got it. So it's basically focusing on local market brands as compared to a larger strategy that you're looking at. What is the blended margins of these three acquisitions? What I'm trying to get down to is that are they adding to your EPS? Are they EPS accretive as of now?
No, most of them, it will take us roughly about 2 to 3 quarters to actually make them EPS accretive. So I would anticipate, and that's why they're more small acquisitions, because we're being cautious and going step by step. But it takes us about 2 quarters to get them EPS accretive. We need the synergies to flow in, the benefits of being on the low cost efficient Thyrocare backbone without any compromise on quality. So it will take about 2 to 3 quarters before these acquisitions get EPS accretive. But that's why they're small, and that's why we're taking it step by step.
So what's the corpus that you have on hand in terms of further acquisitions? Because they are small sized. What's the cash on books currently? How much are you looking to deploy in terms of M&A? What's the pipeline like?
Our operating cash flow is actually quite healthy. We generate, about 150 to 200 crores of operating cash every year. We've kept aside for this year about 50 crores to go for acquisitions, and we anticipate to be on track for that.
Interestingly, Rahul, now I'm going to get to the business. You have 3 different segments which are contributing. Wellness has become a huge mainstay for all of the diagnostic companies now. You have Jaanch, you have Aarogyam, which is your preventive health segment, and you have Her, which is women-centric testing. Jaanch is more lifestyle challenges, which you try to aim at in terms of the patient. Tell us about each one of them. How much are they growing at this point in time? How much are they contributing to business? Which one is growing at the fastest pace? And what is the contribution expected?
Got it. So Aarogyam, which has been our primary flagship brand, continues to grow. It tracks the growth of the company, more or less in line with the growth of the company. And we continue to maintain our market share in the wellness segment, for which we are well known. Jaanch actually has been doubling every year. Even, our Jaanch Fever package, which helps you with the diagnosis of fever, whether you have typhoid, dengue, chikungunya, all in one single test. That actually doubled over last year, and month on month also, as we are in the fever season, has been doubling. So Jaanch, of course, grows much faster and is doing very well. HeartCheck is a nascent brand, so it's too early to comment. It's largely focused on women, but mostly promoted through the gynecologist network. So that takes time to scale up, right? Because we're not going direct to consumer. We are going through the doctor network, explaining the value proposition of having these kinds of tests exclusively designed for women. So that will take time to scale up. But Janch is doing very well. As I said, versus last year, a doubling. And in this fever season, we've been particularly happy to see how Janch continues to be the test of choice for consumers who have fever and also many other chronic disease ailments as they think about better caring for those ailments.
Hi, Rahul. Good day and good to hear you out. A lot of ailments, a lot of testing going on. Oh, I hope most of the tests are negative because there's been a viral in the air as well. But Rahul, I just wanted two numbers from you with regard to your financial performance. I've been looking at it and your revenue per quarter has improved. Now you're clocking 150 crores at least. Last year you did around 570 crores for the year. So the start has been good to the year. Will you deliver more than double-digit growth for this year? And also margins have steadily been improving from late teens to early 20s to you're moving to towards late 20s now. Where should this number stabilize at? Revenues and margins?
See, I've been maintaining my guidance and, I will not change the guidance for the year, even though Q1 has been very encouraging. As you know, Q3 tends to be a difficult quarter for the entire diagnostics industry as we get into the festive season. Funnily enough, festivities are not good for diagnostics. And as you said, the viral in the air is actually very good for diagnostics. So while we've had a strong start to the year, I'm still being cautious about the second half of the year. So I'll maintain my guidance at mid-teens top line growth. And if we are able to see margins remain stable or marginally improve, I think that would be a good performance for the year.
Okay, so mid-teen top-line growth is what you're anticipating.
Yes.
Rahul, I wanted to ask you about the competition dynamics also, because most of the diagnostic companies have said that it's largely settled at this point. You've been known to, offer one of the most competitive rates in the market at this point. What is your experience when it comes to competition in metros such as Mumbai?
Definitely. If you look at the competitive scenario over the last 2 years, and as I've been saying on your show as well, Ekta, Thyrocare is almost 80% tier 2 and beyond, right? We didn't face a lot of competition in those markets because if you look at the new entrants and particularly the new age tech entrants that came into the diagnostic space, they were largely metro focused, right? So I almost think of it like a storm in the teacup, right? India is very large. And with 80% of our revenue in tier 2 and beyond, not metro tier 1, is only 20% of our business. We didn't really face the storm that we saw. But definitely I'm seeing growth coming back in the metro regions. We are seeing competition easing off. Many of the brands that entered are actually, at this point in time, looking at different exit opportunities. So I definitely see the competition in the metros easing off, but the opportunity, Ekta, is in tier 2 and beyond. That's where the vast majority of India lives, has never seen a diagnostic test or, doesn't even know if they have diabetes and things like that. And I definitely think the opportunity sits there.
Okay. All right, Rahul, we're going to let you go on that note. Thanks very much for joining in and speaking with us and giving us your perspective on the business. And I'm sure we'll touch base again soon enough to get a sense in terms of what, where the business lies in terms of guidance as well. Thanks very much for talking to us. We'll take a short break, but on the other side, Manisha Gupta will join in. She has with her PN Gadgil Jewelers. Stay tuned.